Good afternoon, everyone. I'm Cooper Hainey with Agtegra Cooperative, Grain Marketing Specialist out of our Millet location, with your weekly market update. Markets were firm to start the week, but quickly turned around and erased early gains Wednesday and Thursday before finishing strong today. China back in the market for U.S. beans, USDA's monthly report, and weather concerns across the country. Corn rallied sharply on the overnight Sunday into the day session on Monday due to the extended forecast turning very hot and very dry for most of the corn growing areas in the U.S. The strength carried over into Tuesday, but failed to do so into Wednesday and Thursday as the extended forecast turned less threatening. It also appears the market was looking for China to come in and buy some U.S. corn, but has so far been disappointed. The U.S. corn crop is off to a good start so far, with conditions on Monday rated at 67% good to excellent, slightly down from last year but better than the 5-year average. The USDA reported 25-26 corn beginning stocks to be dropped 125 million bushels from the previous month's report to 2.02 billion bushels, but slightly offset by an increase in 26-27 production of 5 million bushels. Exports also increased by 50 million bushels, and D's corn closed up 9 cents today at 461 futures, with some support around the 445-446 area. The soybean market got a surprise this week, as on Monday, China came in and bought a few boats of U.S. beans and continued buying throughout the week. This week, the total of soybean sales was 1.164 million tons, or roughly 42.7 million bushels of both old crop and new crop soybeans. The big question is, how much will they buy? With Brazil being significantly cheaper as an origin, all Chinese purchases of U.S. beans will be purely political. Like corn, the U.S. bean crop is also off to a good start this year at 64% good to excellent rated as of Monday, down slightly from last week and last year, but still above the 5-year average. Today's USDA report was relatively quiet. They cut 25-26 ending stocks by 10 million bushels and increased exports by 30 million bushels, but raised 26-27 production by 40 million bushels. To end the week, November beans finished up 9 cents at 11.90 3/4 futures. The U.S. winter wheat crop is being harvested at a steady pace, rated at almost 60% completed as of Monday, but wheat harvest is just starting to kick off in parts of South Dakota. U.S. wheat production in today's USDA report was dropped to 1.536 billion bushels, which was higher than the average trade guess, but was also helped by a cut in both 25-26 and 26-27 ending stocks. Wheat had a good week relative to corn and beans, finishing up in 4 of the 5 trading sessions, and finished the week strong, with September winter wheat futures closing up 22 cents at 676 futures, and September spring wheat closing up 13 cents at 652.5 futures. Looking ahead to other marketing opportunities, some of the deferred soybean months are still trading over $12 futures, which is historically a pretty good place to get bushels sold at. Otherwise, some of our OTC products are still trading with decent premiums. May and July 27 corn accumulators are still trading at over $5 futures. For more information on our marketing opportunities, or if you would like up-to-date market info, please contact your local grain marketing specialist. We're here to help. That's what we do.